Hi, this is IH Securities. We're a financial services firm facilitating trades on the ZSE. So I'm Tenda, and with me here is Florence. We've been getting a lot of questions around what's going on in the economy and what does this mean for investors on the stock market. So we've developed a series of bite-sized, simple to understand videos, just tackling different sectors, just trying to make them as simple as possible for your consumption. So please do feel free to comment, give us questions in our comment section so that we can tell whether our videos are helpful and informative. And we can also answer those questions if you have any questions to do with the topics that we would have covered. So in today's episode, we're going to be looking at the banking sector as simply as possible. So Florence, obviously the banking sector, it's very important. We're moving funds from your depositors to your borrowers. We're hopefully channeling those funds to the productive sector. So in simple terms, what are you seeing in Zimbabwe's banking sector?
Thank you, Tatinda, for your question. So I'll comment based on 2020 results. What we saw is that deposits significantly went up in 2020, mainly driven by FCA accounts, and these are USD denominated accounts. Okay. So this was on the back of the devaluation that took place in August when the RBZ introduced the auction system. So considering that the local currency was devalued, and then you translate these FCA accounts using the new interbank rate, you would realize that deposits would actually go up. Now, when we look at the loans, you would see that banks are not actively lending out, which is a little bit concerning. When you look at how much they're lending out versus how much deposits they have, you'd realize that that ratio trends below 50%. While when you compare that to other economies, you realize the optimal is between 80% to 90%. So what is driving all this is because interest rates have been trailing behind inflation rate. So this has been discouraging for banks, and that's the reason why they haven't been lending that much.
Okay, so it means in real terms they're not making any money.
In real terms, they're not making money because you have your interest rates coming in at 40%, then your annual inflation trending around 118%.
Oh wow, okay.
Yeah.
All right.
Right. So yeah, then on profitability, you'd realize that ROE, ROAs in nominal terms they increased.
Sorry. ROE, ROA, what does that mean for the layman?
Oh, okay.
Yeah.
So basically, ROE, that's return on equity, ROA, that's return on assets. We are basically measuring how much profits you are making versus your assets.
Okay.
Right. So you'd realize that if you interpret the Zimbabwe numbers, they're suggesting that, oh, they're making so much money based on the assets they have.
Okay.
Whereas if you look at other countries, those ratios are like lower than us.
Okay.
And this is mainly because of revaluation gains and net trading gains. So assets were revalued because of inflation. Right. So at the end of the day, you'd realize that the bottom line, that is your profits, would come elevated because of these like revaluations. And at the end of the day, the ROEs and ROAs were like significantly higher. But in real terms, when you now factor in inflation, you realize that banks were actually making negative real returns. All
right. So what does that mean for your profitability now going into, let's say, 2021, where your inflation is slowing? So it means your, what did you call it? Your
ROE.
Yeah. Okay. So what does that mean going into 2021? We've got less of the revaluation gains.
So definitely those should start moderating, like coming off, slowing down, decreasing, because now that line, the revaluations or the net trading gains, have started like coming off. Okay. So now what is driving profitability is now the real core business of banking, which is lending or just transactions, not like profitability being inflated because of like some currency changes or something like that.
Okay, so still on the subject of profitability, because we're seeing a trend where in other companies costs are beginning to catch up because inflation is slowing and your costs are becoming pegged to US dollars. What does that look like for the banking sector, or does that affect them at all?
Yes, they are affected, but I don't think we're gonna see costs being as high as they were last year. I mean, as in like the rates of increase being as high as 2020. We believe that the cost containment measures that were implemented in 2020 can be sustained into 2021, and inflation is slowing down. So of course, costs will increase, but not at a higher rate that we saw in 2020.
Okay. What about, because I mean, we've been talking a lot about 2020 and 2021. What about going into 2022? I'm sure there are a lot of our viewers wondering what our outlook is. Also, maybe with the perspective of the stock market, I mean, because we facilitate trades on the stock market. So with your banks that are listed, should I be investing? Should I be holding off? What should I be doing given the outlook that you have?
Okay, so based on current valuations, we believe that banks are not really like attractive right now. The valuations are kind of like demanding. Moving into 2022, we believe that there's going to be a turnaround within the sector, and this is on the back of the recently revised bank policy rates, where the RBC is revising interest rates from like 40% to 60%. And all things being equal, we are saying annual inflation is slowing down. Right now it's around 54%. So if you do the math, you realize that for the first time, banks have potential to make profits in real terms in 2022. So yeah, I would say that keep a watch on the sector, because yeah, it's going to be in the money in 2022.
All right, awesome. That was really informative, Florence, and I hope that helped someone. Thank you guys for watching. I hope you give us your questions and your comments in our comment section. I know there'll be some questions. I mean, what's a demanding valuation? And I hope we can get a chat going around that so that we can also respond and give you more information. So yes, that's all we have time for today. We hope that you stay tuned for more videos to come. So for today, that's it. Cheers.